Hey everyone, welcome back to 51%'s Crypto Research Podcast. I'm your host, Tom Shaughnessy. Today on the podcast, I had John Quinn, the co-founder and chief revenue officer at StorJ, spelled StorJ. John shares insightful information on why StorJ is more focused on its competition with the centralized cloud providers like AWS and Azure over its decentralized competitors like SIA, Maidsafe, and Filecoin. Interestingly, the company just announced an integration with AWS, which makes the conversation even more insightful. We also cover StorJ's token dynamics, what's new in their 90-plus page version 3 of their white paper, their roadmap, and what the future holds for StorJ and decentralized storage overall. As an aside, be sure to enter your email on 51pct.io for our latest extensive crypto research and valuation models. 51% is a leading institutional provider offering actionable crypto research that can be used in real time. Our most read research includes our valuation model at MakerDAO, among other reports. With that, here's my conversation with John Quinn. Hey everyone, welcome back to 51%'s Crypto Research Podcast. Today in the podcast, I have John Quinn, the co-founder and chief revenue officer at StorJ. John, how's it going?
Doing great, thanks.
So it's a pleasure to have you on. Let's just start with your background and how you got started in crypto.
Sure. So I came from a traditional finance background. I was a tech investment banker at Credit Suisse. I got a front row seat to the boom bust cycle of the late 90s, sitting in New York. And then I was also capital markets at Deutsche Bank, and then helped run as a managing director at a $200 million private equity fund. And I came across blockchain as something that I thought would be very disruptive to traditional finance. And I started doing some research on it. I actually got a kind of like a CPA for blockchain stuff called a certified blockchain professional and designation. And so as part of that, I started separating, what I thought, the value of the crypto was versus, the underlying technology and what you could build on top of blockchain rails, and things that would be trustless. And storage is one of the projects I started contributing to. At the time, Sean was just coming out of college, living with his folks, but he built a pretty impressive community around people that were very supportive of having a more private internet and basically having object storage be part of that on an end-to-end encrypted basis. This all came about right around the same time. This was all the Edward Snowden revelations. So really piqued my curiosity, and then I got together with Sean and incorporated the business, and we were off to the races.
That's awesome. That's interesting. Your background is definitely differentiated, which is great from a lot of the tech-heavy guys we see. I was on the equity research team at Oppenheimer prior to founding 51%, and our team covered AWS and Microsoft Azure. So the centralized, decentralized storage conversation always, started to pop up a lot. So I guess, before we dive into StorJ, let's just talk about, why do we need decentralized storage at a high level?
I mean, I think you can look at a myriad of hacks and understand that when you have centralized points of failure and those are compromised, then bad things happen. And I think increasingly people want to have basically control over their own data. And I think that if you have a situation, like a big brother situation where everything is available and is unencrypted, and it's in one place where basically they can, any sort of central authority can basically, look at everything that you've ever created, then that's problematic. And I think that, as part of liberty, of all men, it's important to create opportunities for people to store things that are cryptographically secure.
That's interesting. So before we get into a deeper dive on your centralized competitors and your decentralized competitors, let's go into, just a high level overview of how StorJ works, what differentiates the platform, and any key aspects you could share for us before we dive into the competition.
So I think the easiest way to think about storage is kind of Airbnb for disk drives. So we're a marketplace similar to Airbnb. There's people that have excess infrastructure that's latent. So they would have disk drives, they would have bandwidth connections, and they want to utilize those. And so we provide a organized marketplace for them to do so, and we compensate them in storage tokens. And then on the other side, you have developers that are looking for a data layer for an application or for backups or something along those lines. And they want basically a service, and the service has to be competitive with the big three, Amazon, Google, and Microsoft. And so what we've done is basically created this global marketplace where people can share their access infrastructure, and then I think very strong partnerships with open source community companies that can then drive developers to use that platform. So I think that's where we're kind of differentiating ourselves. Is it's we aim to be the largest cloud storage provider in the world without owning or operating a data center, similar to the way that Airbnb is the largest hospitality provider without owning and operating a hotel.
That's super interesting. So, how has uptake been on the platform so far? I know we're arguably very early in, I guess, the need for decentralized storage because, in my mind, we don't have that many decentralized applications that would need to use storage that have come off the ground yet. So, any metrics you could share on uptake so far, or anything there would be helpful.
Yeah, I mean, I think we're not waiting for the distributed app ecosystem to grow for us to grow. I mean, we're really competing heads up with Amazon, Microsoft, and Google, and we're coming after their market, the traditional object storage market. And so part of our growth story is we had version 2 that we were last year, and that scaled initially to about 100,000 farmers. We call them not miners, but farmers, storing about 100 petabytes of data. And then that scaled actually to closer to 150,000 farmers and 150 petabytes. And that was, we started really bumping up against the limits of that architecture. And we felt like at that point in time that we needed to basically take a pause, ensure that all the data that we've had taken on was, stored, continued to be stored properly. So a lot of it was test data, and then basically re-architect to allow us to get to the exabyte range, which our open source partnership program has already identified multiple exabytes of data to be stored in partnership and with the open source community companies. So
that's interesting. So I mean, at first glance, to be honest, I would always think that you guys were pinned against Filecoin and SIA and Maidsafe and your decentralized competitors. But what you're saying is, that's true, but you're really going after decentralized cloud providers here.
Yeah, we don't consider Filecoin, SIA, or Maidsafe to be competitive to us. There's really no revenues to chase there because those markets are so immature. Where we do see big markets and the ability for us to compete both on price, performance, security, and resilience is the traditional centralized cloud providers who are earning tens of billions of dollars in revenues. So that's what we're really going after, I think, with a very strong value proposition. And we're aligning ourselves, importantly, with the open source software community, which I think gives us great inroads to a large number of developers that are already building. And what we offer is to the open source community, basically financial sustainability, because a lot of these, if you look at the amount of payloads being delivered globally, across the big three, Microsoft, Google, and Amazon, they're using open source, but they're usually given for free as loss leaders, and then they monetize the back end on the infrastructure. We've kind of flipped that model on its head and created something that's much more equitable. And so, if the open source community companies can bring us developers, we share in the revenues back with them instead of, kind of ripping off their IP. And so we think that this is going to be very impactful to the open source community, as well as enable us to scale very quickly.
That's interesting. So I guess, I originally thought that there was two wars going on, you versus your competitors, then you versus the cloud guys, but it sounds like the real war is getting ahead of your competitors to then compete with the cloud. So I have to ask, before we get too far into your decentralized competitors, Filecoin raised, I think, 200 million or over 200 million bucks, and their idea is to use IPFS with a token. So basically incentivized IPFS, which stands for the Interplanetary File System. And they've had a ton of talk coverage. They're one of the most well-known, in my opinion, in the public realm for decentralized storage. How are you guys dealing with that? Because they're not even live yet. I don't understand why they have so much press.
Well, I think IPFS is a useful tool. It's a DHT, distributed hash table. I think that got a lot of early interest, but it was clear that you couldn't monetize that, and I think that they then figured out that object storage is something that's a metered service and you can monetize. So they kind of moved in our direction. We wish them well. We think that they have some fundamental problems. Notwithstanding the fact that they haven't published anything since they did a large raise, they haven't pushed any code out for public review. But they are also building their own blockchain. They've got I think some pretty material problems to solve over the next couple of years. And we've been at this since 2014, and we're the only group that's stored over 100 petabytes on a global basis, and so we have a lot of learnings from that scar tissue. And so again, wish them well, but we're really more focused on the big three than we are Filecoin.
That's interesting. And I'm just thinking out loud here. I mean, when you do a big raise for a project like Filecoin did, and you don't have a live product, you have to contend with the fact that there are your competitors are out there building with a token and a live product, while you're still, when's the token to launch, when you're going to raise. So it's a weird competitive dynamic there, which favors you guys over them, in my opinion.
Yeah, I mean, they can't release their token until they launch a product, whenever that is, and so I'm sure that they're getting a lot of pressure from both the institutional investors that invested in their round at a very low valuation, the folks from Silicon Valley, and then the retail investors that invested at a very high valuation just a few months later. I'm sure that there's a lot of pressure on them to deliver, but we're not really focused on their problems. We're focused on our problems, and our problems are, how do we disrupt AWS?
That's interesting. And I want to get into your new white paper, and I want to get into AWS more, but just to understand the project a little more, everybody wants to know, or everybody's always concerned with, how does a token play into the model itself? Because you have to be able to build network effects, attract developers, et cetera. So you guys do have your own token. My two questions for you are, what role does the token play in the storage ecosystem? And two, I guess the harder question here is this token meant to be volatile or non-volatile? Because then people have to worry about, what they're paying for storage if the token value changes.
Sure. I mean, I think that tokens, so if you back up, you can think about, token generation events is both a capital formation event as well as, creating network effects. And in our case, both on the supply and the demand side of our marketplace. So, on the back of our TGE in 2017, we saw a massive explosion, both on the supply and demand of our marketplace. And so it really enabled us to scale globally, which I think is a really underestimated element of a token generation event. And from, I think that our token is, primarily used for paying for storage, and our prices are denominated in dollars, and then we distribute storage tokens. As you can imagine, paying 150,000 farmers through ACH would be incredibly, especially if they're only storing a gigabyte of data, could be very expensive. So we use our token and blockchain specifically as kind of rails for payments. And so we're not storing any data on the blockchain. We're basically using it primarily for a payment mechanism operationally. But what we're seeing is, the token, once people hold the token, receive the token as a farmer, or perhaps pay for a storage service using the token, they start to see that, they sort of invested interest in the project, and that lends itself to them suggesting to their friends who are also developers perhaps to use the platform, or their friends that have excess capacity of infrastructure to, maybe lend that to the market and start to monetize that a bit. And so I think that, it is very early days in this space, but what we're seeing is that the token is really a means for getting people on side on a global basis.
That's interesting. Yeah, that's cool. I mean, it's always interesting to hear how tokens play into the system, or in a lot of cases, I've found how they don't. But here it sounds like it does, which is interesting. And I guess just going back though to the volatility question. I mean, how do you contend with that and dealing with, hey, I know you want
for that, but we price in dollars, right? So for storage, we offer 1.5 cents per gigabyte versus Amazon at basically 3 cents per gigabyte, and for bandwidth we charge 5 cents per gigabyte versus like Amazon charges about 10 cents per gigabyte. So that those for our customers, those prices are fixed, and they can pay with storage token, they can pay with a credit card. So they have the ability to the pricing is fixed on their side. Then we pay the farmers in storage tokens, and storage tokens have probably experienced the same volatility in prices as many other tokens. But we think that over time that as our ecosystem increases and the number of tokens stays flat, that that they'll start to become an equilibrium, and so that storage tokens have gone up considerably, maybe 35 times since inception in 2014. So it's people have participated in appreciation of those tokens, but there are also people are using them for service. So you can basically consider it as almost like a futures for storage. So if you acquire a bunch of tokens, then you can basically have, as those increase in value, you can use those for object storage services in the future, which will cost you less than they do now.
Got it. So since you price in dollars, there isn't an incentive to keep the StorJ token, say, non-volatile, and there could be appreciation in the token to attract interest?
I mean, we're not trying to manage towards a specific token price. We are just really trying to build a global service that's competitive and disruptive to AWS. If you think about token economics, that generally when you have fixed supply and you have increasing demand, if you look at the price curve, it typically moves up. But it's not really. And if the ecosystem, if we go from petabytes to exabytes to perhaps zettabytes at some point in the future, the value of our ecosystem, I think, as that increases exponentially, that would be reflected in the price of the token. But again, we're not trying to manage towards a token price. We're really just trying to launch a global service, and I think that the token price is going to do what it does, and we're not really that focused on it. But I think that generally speaking, economic principles would, for any project, would indicate that as long as those ecosystems become bigger, as long as there's not a high degree of inflation, then the underlying token should appreciate value. Absolutely,
totally. I agree on focusing on building the infrastructure versus managing for a token price. That's awesome. And just to go, before we get into your new white paper, just to go back to the pricing. So basically, you're undercutting Amazon by 50% on the storage price. And I don't know, for those who don't follow AWS that closely, back when I covered them or was on the team that covered them, their growth is insane. It's like 100% every quarter. So, not being able to grow that fast is a huge concern for AWS or Azure if you guys start to go into their market. I mean, so, how do you think about that? I think this is a huge deal for those following AWS, but I don't think that they're taking the space seriously.
Well, I mean, quite honestly, we're like a fly on a hippo's butt right now. We're not relevant in terms of size or scale. And I think that over time, we are going to have a value proposition, or we have a value proposition currently that I think will be quite competitive. And certain people, will basically choose to use us as an object store purely based on price and value that we deliver. And so, I think that as you mentioned, there's the demand for data is growing so quickly. AWS is, kind of locked into their strategy of centralized service, and they have to build more $600 million data centers every quarter in order to accommodate the explosion of data going from, I think it was in 2015, going from 4 zettabytes to 44 zettabytes in 2020, and it's probably going up. Now that's 18 is probably, those are dated stats, is probably moving even more quickly than that. So I think there's an overabundance of data to be stored, and I think that we're seeking to carve out our own space, and I think that in that very rapidly growing end market, and but you can't deny that it's a possibility. Everyone kind of laughed at Airbnb, and I think that now they have the market cap of Marriott, Hyatt, and Hilton combined, as well as more rooms. And so, the sharing economy is very powerful. And so I think that we're marrying that sharing economy with blockchain, and I think that I think it's with an incentive layer of crypto, and so I think that mix is potentially very powerful. But it's way too early to say that we would even be viewed in any sense as a competitor to AWS from their side. But we've got them as our main target.
I agree. I can't emphasize enough. For the analysts building AWS and Azure models, any impact to their growth from a competitor is a big deal, because they're in hyper growth stages, as we all know. But that's a story for another day. So I just have another question on that point. How do you guys handle, think about where storage is going to be with these cloud providers? I just bought a new Mac Pro. It has less storage because I have an iCloud storage drive where I'm storing everything on the cloud now. It seems that consumers are kind of moving away from having hard drives and storage that StorJ could potentially use, and they're storing everything on the cloud. Does that hurt your ability, or is that not something that's a concern here?
So if you look at the growth of hard drive production, and it's ramping right now, a lot of those are being put into data centers to support the cloud. But the manufacturers of those hard drives are being squeezed by the big three, and I think that they also view themselves as having the potential to compete with their customers through us, and so we have active discussions with different manufacturers about enabling them to do so. And we're not really worried about the amount of. We think that there's probably of the total amount of storage capacity globally, about 25% of it's underutilized or not being utilized or latent. And so, we're talking about zettabytes of data storage capacity that's just latent right now. And I think the size, and you follow much more closely than I do, but I think that the size of the cloud of object storage for the big three is measured in hundreds of exabytes. And so there, I think that there's orders of magnitude different between the amount of available supply today, much less on a going forward basis, versus the size of the big three and then the cloud offerings that they provide.
That's awesome, John. That's interesting. And so just switching gears, let's get into the fun stuff. You guys just released version 3 of your new white paper. One of the things I found most interesting is your integration with AWS. But I want to start wherever you think makes the most sense. Let's go through your new white paper. I guess, what's the major differences versus the last one?
Yeah, so I think that there were a lot of lessons learned, and this was like a total re-architecture of our network. And we basically have had almost every conceivable attack vector probed, and so it was just a culmination of the learnings of V2, and basically now that we have large partnerships with open source companies like Confluent and Couchbase and FileZilla and Influx Data and MariaDB and MongoDB and Nextcloud and Zenko, we see a very clear path to getting to exabytes of data being stored on our network. We just knew that the V2 architecture wasn't going to be able to scale We brought in a new director of engineering, JT Olds and Olio, and he's been fantastic in helping drive the architecture on the V3. One of the main considerations is, I think differentiate us from other distributed cloud storage providers is, how we deal with, replication versus erasure coding. And so, through our use of erasure coding, we basically cut down. It's basically 5 times more effective than replication is in terms of storing data. And so, I think that's, probably from an architecture perspective, the most important development. But,
and John,
it was really,
how is that? How exactly does that work? Sorry to interrupt you, but what are exactly, or at a high level, the differences between replications and erasure codes, and who's using what from your competitors?
Yeah. So, I mean, I think, if you look at the Filecoin white papers, proof of replication in addition to proof of time space, but and the proof of replication, it basically is the main underpinning of their network. And so if you basically, if there's basically this concept of K and N, so there's the number. So basically erasure coding allows you to stripe the data such that you basically, so like you could have 2x replication. So you could have basically you have 20 chunks, and then you create 20 parity chunks, so that programmatically any 20 of those 40 can be used to basically reconstitute the file. That's, so basically you've got 2x overhead on your network. With replication, if you're not using erasure encoding, you basically, in order to make sure that you have resiliency of your network, you have to basically replicate that data across, call it 5 different nodes in order to make sure that if one node goes down, that you still got the other 4. That creates 5x overhead across your network. And so that, you're paying a lot of people for basically keeping data that you're not necessarily gonna need. And so it becomes much more effective from a cost and a performance basis to use erasure codes versus replication. And we just recently, JT wrote a blog posting around that in detail, and so maybe we can include that in the notes for this podcast.
Yeah, I'll totally link to it. And, two of the points I know we don't want to focus too much on the technicals here because I'm not too well versed on erasure versus replication, but two of the things that I'm thinking of here is one of the problems with public blockchains is you're basically you have to pay for nodes to support the past history of everything, which is expensive, which it sounds like you guys are attempting to solve here. And the other thing is that, in my mind, if you moved all the data from the cloud onto decentralized storage and had to replicate it multiple times, there just wouldn't be enough storage.
So, I mean, I think that, Amazon and Google and Microsoft are also replicating their data across different data centers in case one data center goes down. So, but I think erasure codes, it's based on Reed-Solomon, which is a pretty well tested, well understood body of work that basically, and so what we're doing is we're just extrapolating that across a distributed network. And I think that some of the things that we're finding is that it creates not only efficiencies in the network, but also it's in terms of keeping track of all the different shards across the network, makes it much more manageable. So I think it helps us in terms of managing and scaling our infrastructure, as well as making it less expensive.
Got it. So the erasure code sounds very innovative. It sounds like a good idea. I'm just wondering, do you have to relaunch your network, or has this already been implemented?
Yeah, so this is in V3. It's been implemented. We're in private alpha right now, so we'll move to a public alpha, towards the end of this year, and then and then we'll be in beta in the first quarter and seek to launch in the first or second quarter of next year. So it's this is and it's all the code is open source. It's in our GitHub repository. Everything is explained in great detail in our 90-page white paper, which is really our our technical roadmap for the next 3 or 4 years. And so it's really out of the laboratory, and it's being tested with our channel partners in the open source community right now.
That's awesome. And John, one of the key points I picked out, I'm sure there's better key points to pick out. There's 90 pages of it, but the AWS integration in my mind is a huge deal because I just talked to one of the advisors, 51% DApp developer, Sam Corso, and he told me that basically, which is simple, but people forget about, you lower the pain points for developers and you could onboard a ton of users. So why are you guys integrating with AWS? It seems like, you're either hand-holding with a competitor or this could be a big deal. And I'm wondering why they would agree to it or if they even have a say.
Yeah. So we're using a company called Minio. And the founder, AB Piersmani, is also an advisor to the company. And this is basically an API that allows you to connect directly, basically our network within. So the API allows someone who has previously used S3 to basically unplug from that, use our connector with Minio, and then start using the storage network. And I think you're right. I mean, we want to create as little friction as possible. And we wanted people to unplug from AWS and plug into us and not have to do a bunch of dev work to do so. So we're trying to make that a seamless process that really makes it easy for them to switch object stores.
That's interesting. And I guess just going further, and you guys might be a piece of the pie, you might not have to solve the whole thing here, but AWS provides, I remember at their annual event, reInvent, they released like 1,000 new solutions, applications a year to help users build out, to use their ecosystem, basically. I mean, how are you guys going to attack, AWS's ecosystem, or is just being the storage component enough for you guys?
Yeah, I mean, if you look at their offering, EC2 is kind of their compute, S3 is their object store, and then they're now doing a lot of AI and other services, and we're not competing on that. We're really competing for object storage. So where people have static content that's written once, read many times, they want to put that somewhere where it's going to be safe. It's going to be private, and it's going to be stored at a price that is half of AWS. They may choose to use us if they're pulling data for then to be used on the compute on the EC2 side and running AI across all that. Then it's probably not the use case for us. But we feel like that there's within the subsector of object storage, there's a really a lot of use cases that would be applicable for us, and that we see a giant market ahead of us, and we don't have to be all things to all people. We're really very much narrowly focused on one segment where we think we can compete on price and value and security and resilience and performance for a limited number of use cases. We're not trying to replicate the breadth of the Amazon offering.
That's interesting, John. So I have to ask, I mean, what is the Black Swan event that leads to a massive tick up in this decentralized storage? I mean, to me, it would be a major hack, but we've seen so many at this point. I feel like consumers are just accustomed to having their social security number out there somewhere.
Right. I mean, I think that I don't see it as, kind of like a single event to trigger. I mean, I think what we're trying to do is, open source software is already being used by, to push, millions of payloads and exabytes of data. And we just want to align ourselves with the tools that are being used, but the parties that are probably being undercompensated for their efforts. And look to basically have a win-win partnership with them, and then have them, instead of basically connecting to the folks that are taking their IP and not compensating them for it, versus basically helping us scale up our business and then share in the benefit from the growing ecosystem of open source software. So I think it's going to be how you eat an elephant. It's going to be one bite at a time. I don't see it as being a single event that's going to trigger a mass shift. But again, we're not really positioning this ideologically. We're just positioning this in terms of value, price, security, resiliency and performance. And so we think that if we get those things right, then rational people will take the right decision, and we can build a consequential business that over time is not very, it's much less capital intensive than an AWS. So we don't have to build $600 million data centers. We think that we think there's zettabytes of excess capacity out there. We think that there's, zettabytes of we've identified exabytes of demand out there. And, we're just going to try to marry the two and do so in a way that competes, straight up with AWS in terms of performance, cost, value, and security.
That's interesting, Sean. And, for people who are unaware of just how big the market is, I mean, it's not just the public cloud providers, but there's also the public data center companies, Equinix, Digital Realty. There's a bunch of them that are billion-dollar companies that basically do just that. But it's awesome to hear that you guys don't have to build a hard drive. You guys don't have to connect a data center, nothing.
No, just the same way that if you have an extra, bedroom in your apartment, you can rent it out to Airbnb, and basically it's just excess capacity that you can then monetize. And so what we're seeking to do is create incentives for people to help us aggregate all that latent supply into an organized marketplace and help deliver value to people that have excess capacity, and then deliver value to people that need object storage.
That's interesting. And John, one last point on the AWS competition. I mean, have you guys ever seen AWS or Azure go down? I always think in my mind, it's not really their fault. It's more a fault of the applications or companies that are building on them that have security flaws. But I mean, what's your take there? Do you think it's more of an issue at the centralized layer like AWS, or more at the application level, or does it not matter?
No, I mean, it goes, when AWS East Coast goes down, I mean, half the internet goes down. There are events, if somebody trips over the wrong cord, that really bad things can happen. And, I think that, they've made huge precautions around those types of events. But, sometimes, I think there was one data center that got struck by lightning twice. And so that kind of fried everything, and then knocked out their data center for a period of time. So, it's just it's a risk of centralization. And I don't think it's really at the app level. I think it's more at the core infrastructure level. I mean, these are, as you mentioned, these businesses are growing 100% quarter over quarter off of big numbers, right? So it's like, to basically execute flawlessly is probably unrealistic as an expectation. So, I mean, I think that they're, and still cloud penetration isn't, really that significant relative to the total market. So it's, they've still got a long way to go. And they're, I think they're going to continue to consolidate, but there's on-prem that's also, quite large in scale. So I think they're tackling really, really tough problems. And, I think that, being able to scale that type of infrastructure on a global basis, it's really challenging. So it's not surprising that mistakes happen. What we're trying to do is basically make it very much algo driven, programmatic. And so, we're working from a basis that no node is trusted. So, we treat, so it's kind of like our force fields are up at all times, because we have no idea of, the participants on our network, if their reliability or not. So we build in disaster scenarios. We provision for that in our architecture, and including using the erasure coding that we talked about earlier.
That's super interesting. So John, just switching gears away from the public cloud back to crypto blockchain world, it's obviously impossible to store all of the data all the blockchain data on chain, store everything on Ethereum. I mean, unless it scales flawlessly, which I think it will, but I think it's going to take 5 or 10 years, or hopefully less with proof of stake and Casper and a few other things, which is now called Serenity. But, what's your take on attracting developers and usage from, things like decentralized application or the blockchain itself?
Yeah, so I mean, we agree that it's not possible to store that much data on the blockchain. It's not well suited for that. So we're not contemplating storing data on the blockchain. Having said that, we have signed agreements with partnerships with distributed apps like YouNow and others, Doc.ai, and basically using us as their data layer. And so I think that there's we want to be the go-to resource for people building applications that are distributed, and I think it's very much in line philosophically because your data is not sent. If you build a distributed app and then you're using Amazon for your backend, it's not really a distributed app. So we think that we'll be the go-to choice for those developers. Having said that, no distributed app is really obtained scale. And so in the meantime, we're going to focus on the traditional storage markets and really try to partner with existing open source projects in order for us to obtain scale outside of the distributed app. But of course, we are brothers in decentralization, and we want to make sure that we're supporting their efforts as well, because I think we're very like-minded.
No, that's interesting. So, I mean, I guess the takeaway I've had so far from talking with you, John, is that, with version 3 of your white paper, basically you've launched something that's much more efficient, but culturally you guys are now, more focused on attacking the centralized market, which is pretty interesting. And I don't think a lot of people talk about it too much. I think they more talk about your interplay with your competitors, which we previously hit on.
Yeah, I mean, there's really it's such early days. There's we've stored more data than all of our competitors combined. So the fact of the matter is that no one is generating a huge amount of revenue from the distributed app space. Tens of billions of dollars are being generated in the traditional cloud storage market. So I think we want to go fishing where the fish are. I think we want to scale up, and swim in the deep blue waters. And I don't think we want to be a big fish in a small pond. I think we want to be a marlin in the open ocean.
It makes the fishing way more fun. Well, John, the other thing to talk about, I mean, it looks like in your latest release, we could probably talk about this for too long. We'd run out of time if we did, but there's a huge emphasis here on security and encryption in your new white paper. I'm wondering why. I mean, did you guys see major flaws pop up, or is this proactive? What was the focus there?
Yeah, so it's client-side encryption has always been a part of our kind of architecture. And so the idea is that if the client is able to encrypt the data on their end before it goes into the network, and they are the only person that has those keys to decrypt that data, then it's just inherently much more secure. That's true, but we also released a blog posting this week around the metadata that's created and as it travels through the network, and really just thinking through the entire value chain of where is data being kind of like digital exhaust from our service that other people could start to pick up on. And so we're thinking about it not I think client-side encryption is table stakes, and you need to have that because you're basically sharing shards of data across a bunch of unknown nodes. But it's also important to think about once it goes from client side to the farmer and then back, how is the metadata being treated throughout that journey, and then how can we make it as secure as possible throughout that journey.
That's interesting. So John, just to zoom way out here, could you put in perspective for us? I know you talked about you guys have more stored on your platform than any of your competitors, but the market is huge. I know in your white paper, I don't have the number in front of me, you shared something like 44 zettabytes of data is expected in a few years, I think 2020, and the market's going to grow to be over 90 billion in size. Could you just frame how early we are in this process by how much you've stored versus how large that market is?
Yeah. So, I mean, if you look at, if it's 44 zettabytes, I think it's an IDC figure that in 2020, and the largest cloud providers are, storing in the hundreds of exabytes. And, we at our peak, I think, stored 150 petabytes. So, we are very, very insignificant in the global scheme of things currently. I think that we're trying to craft a value proposition where we could, we scale to the exabyte range, and I'd say the next 18 months. And then, because we don't need to build out, infrastructure the way that Google, Amazon, Microsoft do, I think we can scale much more quickly, similar to the way that Airbnb was able to scale much more quickly than most people thought that they could, because it's just a sharing economy where, you've got a beach house, you've got an apartment, you've got, this asset that's sitting there that's not doing anything for you. And so how do you put that into a marketplace and monetize it? And we think that there's zettabytes of spare capacity out there. And so in 2020, we think there might be as much as, 10 plus zettabytes of capacity to marry into a incentivized marketplace. And so that's really, where we're our trajectory and where we're focused over the long term is to basically figure out how to get that 10 zettabytes of data and put that into our marketplace and incentivize people to bring it. And then on the demand side, the demand's clearly there, and basically partner with channel partners like in the open source community in order to monetize that excess capacity on behalf of our farmers.
That's awesome. So John, I mean, the 1 cent, 2 cents a gig or whatever, whatever the cent is on Amazon or AWS or Azure, the point you're saying is that can go way lower if all of this spare capacity is unlocked. And even though it's in the cents, so it doesn't sound like a lot, when you multiply that by the number of storage out there, it's a very large revenue figure.
Well, I mean, like if you look at the price dynamic, when Amazon was kind of out by itself, and then Google and Microsoft came in, and there was a very steep decline as they competed with one another. But for the last 2 years, that the price of storage has been roughly flat, slightly down, 2.5, 3 cents per gigabyte. We're launching at 1.5 cents, and we can move lower. There's a cost of capital involved with building $600 million data centers. I think that they can be loss leaders for a certain period of time, but they can't be forever. I think that there may be an understanding between the big three players. So like, okay, we're not going to compete on price anymore. But you would think over time that there would be, they would be able to squeeze out only a certain amount of efficiency out of their infrastructure. And there's just a price of buying land and putting up buildings and running HVAC and running electricity and building out racks, and that there's dollars associated with that. We don't have those in our cost structure. So we think that we have a fundamentally more efficient, capital efficient business model. And what I think, V3 really lays out, what's the special sauce and how do we store people's data securely with a high degree of performance and resilience without, really having our own infrastructure. And so that's, if we're successful, I think that we have the likelihood of competing with the big three in a very small, narrow segment of their overall offering. I don't think that, we're going to displace Amazon anytime soon, but we may be able to take some share from them in a very limited manner. But, it's such a big beast, and it's growing so quickly that could be I think a really compelling business.
That's interesting, John. So zooming out one more layer, are you guys reliant on any public chains, Ethereum, Tezos, Bitcoin, anything like that? Or because you're the infrastructure layer, does that not matter?
Yeah, so we're using, our token is an ERC20 token, and we're using the Ethereum blockchain primarily for payments. So as I mentioned earlier, we had last year 150,000 farmers across 200 countries and territories, and we pushed out payments to all those of our market participants using the Ethereum blockchain. We're not storing data on the Ethereum blockchain. We're storing data in hard drives that are distributed around the world, much like the sharing economy that I described earlier. So, we're pretty much blockchain agnostic. If something came across and we could store data on it, I think that we would be in. We've already switched from the Bitcoin to the Ethereum blockchain. We did that as part of our token sale in 2017. We did effectively an exchange offering for our SJCX token, which was a counterparty token running on the Bitcoin blockchain, and we exchanged that on a one-to-one basis with ERC 20 tokens on the Ethereum network, because we just saw that the basically the ecosystem was moving, the developer interest, thinking about a Turing complete computer that Ethereum was creating, that that's where the developers were going to be, and we want to be where the developers are going to be. And so right now that's with the Ethereum blockchain, but if that were to change over time, we could certainly change as well. So we're not wed to any particular blockchain.
That's awesome, John. And two last questions for you. The first one is, what's the minimum here to be a farmer on StorJ? Is it 1 gig connection speed with a 500 gigabyte hard drive? I'm just wondering what the barrier to entry is to get to be on the platform.
The most important thing, interestingly, is really uptime. So when we look at basically evaluate a node, the amount of storage capacity that they have is important to a certain degree. The amount of bandwidth that they have is important to a certain degree. But the uptime of that node is probably the driving consideration if they're going to become a farmer for the storage network or not. Because
that's funny, because I saw in your white paper that it's not the bandwidth speed, but it's the bandwidth, the amount of data, the cap per month. That's the issue.
Yeah, the cap is important, but there's an order of magnitude difference in terms of very little, small changes in uptime affect our network quite significantly. And so the most important thing is that they have a high quality bandwidth connection, and that device is accessible at all times. And if that's the case, whether you've got gigabytes or terabytes or even petabytes, that you would start to see a lot more shards being striped across your infrastructure based on that uptime than probably as a driving consideration versus the size or the speed of your bandwidth.
That's interesting. So, John, one of my last questions for you: how has the reception been to V3 of the white paper, or what are the major criticisms you've seen about storage so far? Because I don't think the white paper has been out long enough for people to have any harsh criticisms of it yet, and it's built on such a lengthy research process.
Yeah, so we really tried to collaborate with some of the leading minds in the space, and so you can see from our contributor list that folks that have created Kademlia, Minio, some of the the thought leaders and practitioners of distributed systems. We're also doing a security audit with Least Authority, which is a project that Zuko started with some folks that are I think very much considered like the top security auditors in the space. And so we it takes a village, right? So we're not trying to do this all ourselves. We're open source. Anyone can come in and start to contribute if they see a glaring security hole within our infrastructure. They can basically ping us. We've got a very large community in the tens of thousands of developers that are basically actively looking and saying, you guys should think about this or think about that. And it's really powerful and then that's another, I think, great reason for the token is you have all these people that really care because, they've got some incentives built in to their ownership of the token. And so, we think that crowdsourcing of knowledge is really quite powerful and will, do us really, really well over the long term.
That's super interesting. So, John, are there anything I missed? Anything you want to talk about?
Let's see. Well, that we are going to be making some changes based on some feedback that we received on V3, and so you should expect probably and perhaps in the first quarter, a slightly adjusted version of that coming out. But so far the reception's been great. We're just heads down building product. We've lined up already 10 very large consequential open source software partners, And now we're just looking to deliver the service to them, and then it's off to the races. So I think that the second quarter is our anticipated launch, and we're working really hard to make sure that that goes off without a hitch, and that we've the good news is this isn't our first rodeo. We've been at this since 14, and we've made a lot of mistakes along the way that we've learned from. And I think that building this with exabyte scale in mind, building this with open source community members input, this is and then also the knowledge of the crowd, bringing in all of their value add as well, as it's really shaping up to I think be a really exciting project. So if people are interested, they can follow us on social media, and we have you can go to storj.io and get involved with our community. I think it's a really robust community, and we're focused on doing. We're not focused on the hype. We're heads down. We're looking to compete against AWS, and anyone who wants to come along on the journey with us, we're really happy to have them.
That's awesome. So John, before I let you go, one last question on that what you just talked about is the next release. You talked about a release that you're planning. Is that the V3 release to confirm, or is that what exactly is that release that you're planning?
So it's a slightly adjusted version of version 3.0 based on some feedback. We put this out in the wild, and now we're soliciting feedback from we've gotten a huge number of people coming back with suggestions around it. And so I don't think that the broad strokes are going to change, but around the edges there will be some changes, and that will probably be released in the first quarter. So we're as an open source project, we're always actively soliciting feedback from both our customers and channel partners, as well as the dev community. And so we put that out but it's always going to be changing. It's always going to be sharpening the knife and getting better. And so we're not anticipating a V4 anytime soon, because the birthing process for this V3 was pretty tough. But there will be 3.1, 3.2, and there will continue to be improvements made as we get more learnings and get more feedback from our ecosystem participants. And so but I think that 95+% of the white paper will remain the same between now and the next version. So no radical changes, just I would say incremental improvements based on feedback we've received and learnings that we've achieved.
That's awesome. Well, John, I will link in the show notes to your new white paper, your site, yourself, and your Twitter account on StorJ so people can follow. It's been a pleasure having you on the podcast. Thanks for listening to the podcast. If you enjoyed this episode, please rate and review it to help other people find it. And head over to 51pct.io and sign up for our extensive research alerts so that you can have an edge on your competitors.